Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again on the euro currency. So, the situation has become a bit more complicated compared to recent session, but nothing extraordinary has happened. The market has done precisely the action that we discussed yesterday. So we said that be aware of the possible grabber. If it will appear, that will be additional point for the bears. It makes overall bullish scenario weaker, because grabber itself suggests drop below these lows. But in the current situation, in this context, not just the drop below the lows important, but important the fact that market will return back in the flag consolidation. And in this case, this spike out of the flag could be treated as bullish trap by the Jack Schwager framework. It's a classical technical analysis. The failure of the flag breakout calls us the bullish trap, and it suggests the breakout in opposite direction. So we do not know whether this will be definitely breakout, but we could say that in this case, it's definitely market could reach 111. That what brings grabber to us. Alternatively, the grabber could fail, of course, as any other pattern. For example, if market will jump up and taken out of this top, raising the grabber, then normal bullish scenario will be reestablished. But currently, this pattern, guys, is additional risk factor for the bullish context. It hasn't started work yet, so you can see market just stands here. But this is the warning sign for us. Second moment, we said keep an eye on the support line. To keep bullish context, market should not drop below this line. It would be perfect if it would hold above the confluence support on the hourly chart, but we could accept deeper retracement, but we should be sure that market will not drop below it. And that's precisely what we got yesterday. Drop right to the trend line, pull back, now market's return back down. So currently market provides very good situation for those traders who like to take some risk and trade in risky trades. Why? Because at this point when the market stands right now, it's a kind of the border between the bullish and bearish context. And when you're taking the position at the border, you could be sure that you will have minimal potential risk. So if even you will get the loss, it will be minimal risk among all other setups that exist currently in the current scenario. Whether in other case where you could take the position here or maybe here, anyway your risk will be greater and reward will be smaller. But here is the point, as I call it, the culmination points. This is the type of points that provide you best risk-reward ratio. I mean in terms of reward, or better to say reward to risk ratio is best. Just because of very small risks that you will take. It doesn't guarantee you that you will succeed, so risk still here is significant because we have the bearish grabber now back. That doesn't bring the optimism actually for any bullish trade. But if happens so that market indeed erase this grabber and continue upward action, that will be perfect entry opportunity. Why I'm talking about entry here? So take a look what we have on the hourly chart. In the first glance, there's nothing to celebrate, because take a look at this ABCD top. Market hits precisely the XOP, which is the right at the trend line, shows the pullback. Now it returns it back down, and it seems, well, what's the really optimism around this? Because reaction on the XOP already is done. Market wasn't able to reestablish upward action. Now it's returned it back down. It seems that market has to break this area to the downside, because it shows no ability to show the upward action. But not So as simple as it stands currently, because take a look what we have. On this first pullback, market has formed clear triple to buy pattern. Now it stands in a minor pullback. That was wash and rinse of these lows. As markets take the stops, and if you plot the MACD predictor, you'll see that it's also the bullish grabber here. And this combination brings some hope that indeed market could show some upward action up from here. So that could give you a chance to move stops to the break even. If you'll take the position here somewhere on this candle, well, you could protect it with the stop, break even stop. Initially, you have to place stop below these lows. It's very small stop will be. And if we will be right and market reestablish upward action, erasing the grabber on the daily, well, that's will be best point where you could take the long position. So, but that, guys, is very, well, it's really advanced approach to its overall trading on intraday charts, and it's not suitable to everybody because, well, risk here is also significant. So you have to think about it and make your own decision whether you would like really to deal with this stuff or not, because we still have the grabber on the back, and it really could work. In this case, market will just break this line down and continue to the downward action. But I am personally interested with these minor details that are not obvious, and if you could read correctly the market mechanics that stand beyond these candles, that could give you some advantage. And you could take the different look at the ongoing process that you see here around the support area. Now I would like to share it with you. So, in a major term, we are watching for a daily chart and a grabber. For daily chart, we need to see either breakout of the and raising of the grabber. In this case, we will tell that, right, we are going long again, so market is coming higher. Or we will be waiting for a breakout inside the flag, in this case our next destination point 111, with potential further breakout to the downside. So that will be important moment if market returns back down in flag and suggests deeper retracement. So that's our major points in our trading plan. But if you trade on intraday charts, you also could pay attention to this combination, because here in this moment it's very interesting. And well, you make the decision by yourself. It's interesting to you or not. Also, additionally, if you have the bearish view, you could somehow keep an eye on the bearish grabber on the daily, because it's very clear. You know that you're in validation point above this top. It's the same, approximately the same balance of the risk with this trade. And if you have the bearish view, you could just suggest some pullback here or position taken against this top, with the hope that market still will break this trend line to the downside and grabber will start to work. So that's two alternative views on the market based on the patterns that we have, based on price behavior. Well, you could make your choice by your personal taste.